Good morning. It's Merritt with Apteros Trading. Let's look at the S&P for June 17th. So, big day yesterday, right? Let's just kind of zoom out for a second. I'm going to give a real big picture take here. So, remember this was a bull zone we were stabilizing from yesterday. That broke down and it zipped right into kind of, I think there was I had another level, I forget where exactly, probably right here. But there were two kind of, larger neutral inflections amongst all these other dashed neutral levels. And we zipped right down into there and then bounced into the close. In general, this is a place. I'm talking big picture here. I'm not really talking day trading here. This is a place where it could be a fantastic buying opportunity for a big picture view. If we stabilize here, if we do not essentially take out last night's low, and we find support 41.90, and we find support above, 4,200, it is a place where we could see a larger picture type bounce. Personally, I'm leaning towards more downside here. If we start to zoom in here and actually get to our time frame, which is the day time frame for me, I am more focused on this 42, call it 10 to 12 zone here. I am bearish underneath there. That's my main line in the sand for today. I'm bearish as long as we're holding that. We might come up and not be able to get quite that high. We might find sellers, as we most recently did from this swing high from 42.07. That's also a nice one. I think it's pretty bearish that we're starting to hold somewhat, predominantly underneath this 41.9850. But keep in mind, bigger picture support, which is why we stabilized down here after FOMC, which is why we've stabilized down here pre-market heading into the open. So a little bit of dissonance, I think, is important to point out here. This market has reverted to an area where it has found buyers and it is stabilizing. I am, however, bearish, going with the more recent value migration lower, the more recent break, as I mentioned, and this is the line in the sand for that bearishness to continue. If we start to hold above here, still plenty of upside before we get to all-time highs. So you don't have to buy the bottom. You could wait for us to get above this bearish level here today and begin to pick your spots and look to get involved on the long side. I think a very likely place would be a reversion up into 42.30s, which, by the way, is the next bearish inflection. So I think that's pretty heavy resistance once we get there. On the downside, again, pretty straightforward. For me, it's get into a good short as long as we're below the line in the sand from an intraday perspective, a setup that makes sense for me. And then look for continuation or monitor for continuation, as some people say. So we could begin holding below here. We could begin holding below here. And there's a lot of downside potential. I think that this market could really get to, let's go ahead and put a level here, huh? 41.40s could be a place where we revert to. That's my view on the S&P today. Trade well.